Hello everyone, welcome you all to the third episode of Breakfast with Jorge. Hey, good morning Jorge, how are you doing? You have been traveling, so where are you today and are you having your breakfast right now?
Hi, good morning. How are you? Well, um, what I'm having for breakfast, I'm having my traditional mate. Remember, this is with hot water. You pour it
Okay.
on like this. Yeah, just to avoid any accident. There is herb inside called yerba mate. The water is warm, and this is like steel straw that we call it bombilla. So I am
Yeah.
now in Miami, back home for a couple of weeks, um, and I'm fine.
It's been a very price sensitive week lately, isn't it? What are your thoughts
Yeah,
upon this?
it's been really a very, very active fortnight. We have seen most of the base metal prices to go up and down, of course, but with a very strong upward trend. It's a bullish market. And when we go particularly into our commodities, for example, aluminum has reached on December the 19th this year, of course, a nice price of 2,945 with a very important contango of around $50. To be more precise, is 48. What does it mean? That the cash price is $48 lower than the value I'm saying, about 2,950, 45 ish. And this contango is extremely important nowadays because of the opportunity it offers when buying and when selling. On copper, copper is like the new star. I call it new gold. We are going to talk about that in the future. But gold has reached 11,880 on the close, but it was around 950, 11,950, with a small backwardation of $7, which means that the cash price is $7 higher compared to the 3 months price. Zinc. Zinc is interesting because it has gone from a backwardation of around $25, $30 to a contango of $31. The zinc level is around 3,072. Nickel, another important issue, which brought the nickel down to 14,200 seen on the last days, and immediately bounced back and recuperation to 14,800. It's a 4% recuperation from the lowest. Then lead, with also an important contango of around $50. Lead is doing around 1,985, while the zinc is doing 43,200 and something, 27 more or less, all strong. Yeah, it's been a very, very sensitive week, consolidating prices. One of the factors, the key factor, is the softening of the inflation here in the USA, which brings an expectation of lower interest rate, a weaker dollar, and stronger base metal. By the way, the rupee, the Indian rupee, it's under $90, 90 rupees for a dollar, which is an assumption we made
Yeah.
on our last encounter.
And gold as well, right? So tell me something about
Yeah,
gold.
the gold is also strong. It's close to 4,000 $400. I mean, to be more precise, $4,387. That's the gold. And the gold is a separate issue because the gold has not a price which is fixed by the market based on the economical effective industrial utilization as a conductor. The value the market adds to the gold goes to the Homo sapiens. Why is that? We go to the very, very past, because in the past, the existence of gold, provided the level of education and ignorance reflected the sun represented God, and immediately, I mean, since it's a metal which is not abundant, I mean, there's not everywhere, it brings you the comfort to be closer to God, closer to the sun, and reduces the fear of death. I mean, we have to go there. And from there on, there is the people who wants to have gold. There are the governments who want to fix total report of their reserves in gold, and that's it. I mean, a similar phenomena is happening with the cryptocurrencies. Do the exercise. Ask 100 people what's behind a stock of Apple or Nvidia or Tesla or whichever, or Alcoa, Alcan. I mean, the concrete value is a company behind that, right? But what's behind the cryptos? A blockchain? What is a blockchain? Information? Abstract? So it looks like there is not something concrete as in the shares, but the world wants to have it. The consumers wants to use it. It's acceptable as an interchange counterparty of a commodity, and the value is created by the people. The moment that might not be accepted would be the end of the cryptocurrency, the same as the gold. When the humanity, I mean, it's thousands of years of construction, thousands of years of destruction. But the potential value of gold is not 4,400. Well, that's my answer on the gold.
And what about oil?
Well, on the oil, the oil is another interesting issue. The oil has reached a price of about $57, the WTI. It is, in absolute terms, a low value. Of course, we have seen crazy values during the pandemics. It's not a reference. I mean, it's not a reference to compare. But I believe the lowest on the WTI was this year 55. So we are very close to the 55. And again, can the world be working without oil? Not short term, long term, yes. So the longer term value of the WTI might be zero. I mean, it was negative during the pandemic, but that was a different and complicated situation. And that covers your question of the oil, yeah?
I don't understand what has happened around the world to generate such high market volatility.
About the high volatility, yeah. What happens? Remember, who participates on the commodity market? Consumers, producers, doing hedge, but mainly investors. How can you hedge funds? Investors, speculators, investors who believe the market will go higher, they buy, the opposite, they sell. You remember, in the futures market, just guaranteeing your position, you can go short or long, wherever you want to go, right? So they cover 95% of the volume. So in other words, any news related to the commodity itself can be a short-term driver, a long-term driver. For example, this week we had no particular news on the commodities, but we had one news on Mosal, which is Mozambique aluminum, producing around 500,000 tons per year. So decided to slow down the production based on higher electricity costs. Yeah, and this is a driver which acts once, boom, but does not act everything. It's not that every day I stop, I restart, I freeze, I restart. There's no, strike today, agreement tomorrow. That is not like that. The volatility is focused mainly, and it's created by who's behind that, which are the investors that at the moment of time they believe they should keep buying, or they are satisfied with the profit, there are profit taken, or perhaps they have a wrong position based on the market behavior. They could be, for example, short and the market goes up and they execute stop losses. That means buy, and the buying side creates more volume, or issues related to the guarantees. That is all volatility.
And more specifically, why the price of gold is so high?
Yeah, as I said, the price of gold is high, but it pretty much refers to our previous. I didn't know that you would ask me that, but I think I covered then. So my belief, I remember when I started watching the market, the ons was under 300. Under 300. So the best investment would have been buy and wait for 10, 20 years for the future. I would really be cautious if you believe that buying at this level, waiting 30, 40 years will represent a 10 times more value. It's pure guessing, but I won't take that decision. I thought the same when I saw it under 300, but looking at the market and the word, at that moment of time, it looked a little bit more reasonable to buy and wait.
So I see you're moving out of other activities, like you're launching a book, new book.
Yeah, I'm launching. I'm so happy. After I finished my book, I feel relieved because there is 40 years of experience, 40 years that they fly away, and you raise experience cases. In this book, this is a manual. This is a 500 pages book. I love the hardcover version because it denotes strength and pretty much nice. And there are more than 50 exercises, and I believe that, as the subtitle says, it's very important to become a good trader if you are a beginner, or if you are an advanced. It will help you a lot, really a lot. I believe that in 1 or 2 years' time, I'm going to start writing a second part, mainly focused to the options, which I love them. But this is my book.
I wish you a very good luck for this. I understand that you will be coming to India, so am I right?
Yeah, next month, in less than 1 month, I will be flying to Jaipur for the
That's great.
MRI Congress, and I'm gonna be a speaker. I'm gonna be on January the 21st in the morning, integrating a panel, and we are gonna speak of hedging recycled material, hedging scrap, which is so important. I mean, you can have higher margins, you can, of course, speculate. I mean, if you buy, you don't hedge, you're speculating. And the market is offering some wind in your favor. It blows in the back, you know. Market goes higher, you buy, pay, wait, market goes up, you sell. But this is not happening every day, every month. And also to take advantage of the possibilities of the tools, because you can buy an insurance if you are long of material because you paid and you didn't sell and you expect the market to go higher. You just buy a protection, which is a put. You pay a premium, expect the market to go higher. You never exercise your insurance. You don't want to crash your car. But there are other alternatives. Yeah.
Well, Jorge, it's been a real pleasure to have you with us again.
Thank you.
And
see you next time.
Yeah. So, likewise, we have ended our third episode of Breakfast with Jorge. Stay tuned with us for more market updates like this, and do not forget to subscribe our YouTube channel. Also, like and put down your comments below. Thank you.